All right, traders, new video on correlation trading and how we can use correlations to construct an investment portfolio. I'm using a new recording software, so leave a comment below if you guys like this more. I personally like this software a lot better, but let me know what you guys think of this new setup I have. All right, let's get into it. All right, traders, what we are looking at now is Quant Tower. And the reason we're back on Quant Tower is I found that this is absolutely the best correlation analysis that I've ever seen. That's not really saying much because a lot of websites don't do correlation that well. And a lot of people also neglect just how important correlation analysis is. But I'll show you guys how to get there. So to get there, you go to your Quant Tower. This is completely free. This part of Quant Tower is free. You can access it. You're gonna go to Stat Matrix. We're then going to click two currencies. So let's do BTC Perpetual, which as you can see, we have a chart right there of BTC. And then we're also going to add, let's do Doge to start. What's the correlation between these two assets? Basically, the correlation, if you were to record bars in the past, let's say 1 month, 1 minute candlesticks over the past 1 month, there is a 0.95 correlation between BTC and Doge. That basically means that whenever Bitcoin rises, almost always Doge rises in the same 1 minute candle over the past 1 month. And if Bitcoin falls, basically almost every single time Doge falls as well. So this is not shocking at all. And we know that in a short-term analysis that there's a very high correlation. Here's where things get interesting though, when we analyze this relationship. Look at the 1 hour, much weaker. This is because I think more medium term, Doge deviates a little bit more. And you may think, well, why on the micro time frame does BTC and Doge, why do they follow each other so often? It's because of algos. I'm pretty confident that because of how algos work, I think that when BTC, let's say, rises 0.5%, algos will be buying Doge. So that's kind of why. But then over a 1 hour period, things, maybe that doesn't have as large of an effect. If we go something like a 4 hour, 0.2 only, as you can see here. But of course, this depends on the day. If I was to do, let's say, a 1 minute over the past 3 days, well, still it's a pretty strong correlation on the 1 minute. So this is how you construct a stat matrix. But something I want to show you guys that I found quite interesting is a coin that has a very strange relationship with BTC, and that's Matic. So look at this. The correlation in the last 1 month is on the 1 minute is pretty positive. When we get to the 1 hour, it's negative. What this means is that the majority of the time that Bitcoin rose, Matic fell in a 1 hour time frame. Majority of the time that Bitcoin fell, Matic rose. Okay. Let's go see if this happened in the last 10 days. Yeah. 5 minute period. Yeah. So the negative correlation is still there. It's just so weird that on the 1 minute, super short term that we have positive correlation, but on a 5 minute you have negative correlation. Basically, again, it's the same story. What we're seeing here is on the very short term, if BTC rises, Matic rises a little bit, but when we zoom out a little bit more, they're more negatively correlated. What can we do with this information? Well, that's where I bring you to round 2, which is synthetic symbols. And this is where we can actually begin to construct a portfolio or just get a good trading strategy together. So if we click this, I'm going to click Create Synthetic. I'm going to say Matic and BTC. And let's add both coins. So to do this, we're going to add Bitcoin. And I'm going to add Matic. I'll show you guys how to do this. So right now, I know that I'm looking at another monitor right here. It looks like about 26,000 Matic are equal to 1 BTC. I know that number will change, but for demonstration purposes, I'm going to put that in here. What this is basically saying is that this portfolio is 50%, which means that we hold 1 Bitcoin and 26,000 Matic, which is about a 50% portfolio. So let's just see, what can we do with this information? How would it have performed with this kind of setup? So if you want to get that, you click Save, and then we're going to click this, and look at all the things we can do. Not only can I get like advanced data like this on a synthetic asset. This is pretty cool stuff, TPO, if you guys are into that. I can also do something like an order entry where I can actually make a trade. I can make a trade that buys both of them, to my knowledge. So if I was to click buy, it would basically, I think, it would buy 26,000 Matic, it would buy 1 BTC. So instead of trading a single asset, you can act a little bit more advanced here, act more like a fund manager, and you can do something like this. And look at all that. Time split, if you don't want to buy them at the same time, show VWAP, and we can see the VWAP of this combined portfolio. But instead of getting to order entry, let's just go to the chart. So let's go see what this looks like. This is how, if you were to buy Matic and buy BTC with 50% weight, how is it doing right now? So right now you can see it's not doing as well. Let's go back, 50 years. Let's go back 10 days. So it seems like this portfolio wouldn't do too well, probably because overall crypto's been moderately bearish. But with that negative correlation, if you were to short both of these assets, then of course this would have done pretty well. And I think that if you were to short Bitcoin and short Matic, basically, if Bitcoin rises a fair amount, I think that Matic should, according to the correlation, fall, and hopefully that would make you some money. So, but right now it looks like this kind of portfolio wouldn't have done too well, as you can see. But I'm curious to see, if we were to go back 1 month, let's see how, oh Lord, look at that. Yeah, I think it's because crypto fell. All right, 1 hour? Yeah. So it seems like this setup is a little bit tricky, trading Matic and BTC, but what if we change Matic to something that's hyper-correlated, Doge? And right now, let me look up how many Doge are equal to this. Okay, so 104,000. So right now it's 104,000, which means that 104,000 Doge are a Bitcoin. By my knowledge, yep, save. Yeah, so that's correct. So let's go look at this. And you can even do this if you want to trade Bitcoin and Doge at the exact same time, or if you want to be more like an HFT and basically you could maybe use this to your advantage to, let's say, I'm trying to think about how you do that. If Bitcoin begins to rise, you think it'll continue rising, and then you think Doge is going to rise, so you just buy both using this. I've actually never seen. That's really weird. Is this going to give me an aneurysm? Oh no, it's not the one that's going to give me. I think this one. No, market depth. Let's see. Wow, that's really interesting. This is combining the market depth of Bitcoin with the market depth of Doge to create a synthetic asset that we can actually trade. But I know what you guys are all waiting for. Let's go to the chart. So this is what would happen if. Oh, no, sir. Oh, I didn't. Did I not save it? No. Take me to the chart. This guy? No. Chart? Oh, I think that it says Matic and BTC because that's what I named it as. I named it as Matic and BTC, but it's actually Doge. Yeah, I think that this is actually Doge. Yeah. So it looks like this one wouldn't have done too well either because of, because Bitcoin was falling. So this is really how you can begin to construct, a portfolio. And there are other things that we can do with this as well. So let's say that I want to create a portfolio and I'm like, all right, guys, let's say hypothetically, I hadn't gotten to crypto yet. I'm like, all right, let's do the whole crypto thingy. I'm going to buy some Bitcoin. I'm going to buy some Ethereum. So let's do Ethereum, and I'm also going to get, for the memes, the controversial coin Doge, and this is all on FTX. So let's say that I do 100,000 Doge. These are just made up numbers, but I think that they will help illustrate a point. 100,000 Doge, save. How many Ethereum are we gonna get? Let's do, my math, 20. So we have 20 Ethereum, we have 100,000 Doge and 1 Bitcoin. How does this portfolio perform? with a split of Ethereum, Doge, and Bitcoin. So this is how that would have performed. Yeah, I know it says Matic and BTC, guys, but don't be confused. This is not Matic and BTC because it's, it was Matic and BTC was like 71,000 for synthetic. This is in the 100,000s for synthetic. So I just was too lazy to rename it to BTC Ethereum Doge, but it is BTC Ethereum Doge, so don't be fooled by that. So we can see here that if you had done that, that would have been not the greatest. If you'd done this a year ago, though, I'm curious what it would look like. If you had bought 20 Ethereum, you bought 1 Bitcoin, and you bought 100,000 Doge 1 year ago. Oh, I put it on 1 minute. That's why it's going to take like 25 years to load. Yeah, here we go. If you had in, let's say, not beginning of 2021, when is this? In the 4th month of 2021, 4th month, January, February, March, April. Yeah, April. So if you had bought 100,000 Doge, 20 Ethereum, and 1 Bitcoin in April, I mean, you would have doubled your money, essentially, because, I mean, you would have doubled your money if you had sold. Important caveat there. Because if you had gotten that, this portfolio, I think, would be worth about $115,000 right here. So you buy in for about 115K, and then that portfolio will be worth about 205K when it goes up to here. So that is how you can create synthetic symbols, and that is also how we can create correlation matrices. This is super, super important, I think, for quantitative traders, for maybe even guys who are looking for, hey, can I create a strategy that mimics what algos do? Basically, if Bitcoin rises, I buy some altcoin, And I think there is some edge to be found by doing that before other people get to it. So if I go to a random coin, like don't even look, and go to, who is this? Oh, Ethereum BTC is way too popular. Okay, random coin, no, that's gold. I can't do packs. Tomo? Yeah, fine, Tomo. So if I get Tomo, let's say, and I get Bitcoin, USD, and let's say I was to code a strategy, that's correlated. Wow. Yeah, so this is so correlated that let's say you get some strategy where if ever Bitcoin rises at least 0.5% within 5 seconds and Tomo hasn't risen, you buy Tomo. You could code that probably pretty easily, and you could use this tool to screen for which coins that would be best to do on, because it looks like this would be decently powerful for sure. And we'll see, going back 1 month of data, just how correlated every single 1 minute candlestick is between Doge and Bitcoin. 0.92 positive correlation. So hyper correlated. So that's going to do it for this video. I know that this might be getting a little too technical for some people, but for me, this is exactly what I look at day in, day out, because this is telling me really what should I be expecting from my portfolio holdings, by looking at correlation. And then also for more advanced traders going into synthetic positions where either you're creating a hedge or you're just creating a portfolio of like 5 different assets. Quantar will help you do that, and they'll help you do that for free. So without further ado, happy trading, and get that correlation matrix running.